Trend recognition and retail trap system. Stop. If you've ever blown an account watching the market betray you, this is why. And how you can finally trade like the 3% who survive. Let me ask you something. How many times have you entered a trade thinking you caught the perfect setup, only to watch the market run straight against you? Your heart races. Your hands shake. You thought you did everything right, but your account told a different story. That pain in your chest. That's not bad luck. That's you fighting the trend. Every losing trader has the same disease. They ignore the bigger picture. They zoom into the 5-minute chart, they see what they want to see, and they gamble. They convince themselves they're smarter than the market. But the truth? The market is laughing at them. Because they're blind. For example, daily chart, strong downtrend forming lower highs and lower lows. H4 chart, reveals a small retracement that looks like a reversal. H1 chart, shows an early, long signal that retail would chase. Notice how retail sees opportunity on the H1, completely ignoring the daily downtrend. That's the trap. Why trend recognition matters. On the daily time frame, institutions leave footprints. These are maps showing where price really wants to go. On the 4-hour chart, you see the path being carved, where momentum is shifting. And the 1-hour chart? Precision entries, but only if you already understand the higher timeframe direction. For example, daily, uptrend with higher highs forming. H4, pullbacks forming clear momentum signals. H1, multiple fake breaks below swing lows, retail shorts are trapped. If you enter without considering daily and H4, you are entering blind. Retail is addicted to instant gratification, jumping into small time frames. This is myopia bias, they only see the tree, never the forest. Without trend awareness, you're swimming against a tsunami. And the ocean doesn't care how hard you paddle. Multi-timeframe benefits and chart examples. Clarity over noise. The daily chart cuts through noise. Retail sees randomness, you see direction. For example, daily, clear downtrend. H4, minor retracements look like reversals. H1, multiple fake breaks, retail short positions enter in panic. Clarity comes from seeing the bigger timeframe first. You now anticipate the retracement, not react to it. Momentum confirmation. The 4-hour chart shows if the daily trend is strong or weakening. For example, daily, uptrend intact. H4, momentum weakening, higher lows forming. H1, false break below support. Retail enters shorts, you wait for confirmation. This prevents trading false reversals. Precision and timing. The 1-hour chart refines entries. You don't guess, you strike at exact zones. For example, H1, retracement to key level after MSS on H4. Entry executed with stop loss below liquidity pool. You wait for the pullback, strike precisely, reduce risk, and align with the bigger trend. Why traders fail without trend recognition. Common mistakes: buying in confirmed downtrend. Selling in confirmed uptrend. Trading against higher timeframe liquidity. Believing every reversal is the start of a new trend. Overconfidence bias, believing one candle flips trend. Revenge trading, fighting the higher timeframe to win back losses. Ego attachment, wanting to be right instead of following the trend. For example, daily, clear downtrend. H4, liquidity pool forms under support. H1, retail shorts on fake breakout. Market sweeps equal lows, taking out retail stops. That's why they fail. You think you're smarter than the market? The market has billions of dollars behind it. You cannot fight that. Stop gambling. The trend is your only friend. Retail trap, RT. Even traders who understand trend recognition still lose. Why? Because they don't understand liquidity. The market gives a trend, then rips it away. This is where the retail trap comes in, the system designed to exploit the very games that destroy 97% of traders. Liquidity pools. Before every trap, there must be bait. The bait is liquidity. Check what is liquidity full video, link in description. Liquidity pools equals clusters of retail stop orders. Equal highs or lows, obvious support/resistance, trendline touches, order blocks, last previous day or week highs and lows. For example, equal lows under support on H4 and H1. Retail believes this is safe. Market sweeps them liquidity collected. Retail loves comfort. They place stops predictably. That's why liquidity exists, to be taken. Step 2, Retail Trap, RT. This is the heart of the system. The moment retail thinks they're right, but they're trapped. For example, market sweeps equal highs on M30. Retail goes short, market flying. The RT aligns you with the hunter, not the prey. Market structure shift, MSS. The trap is set. Liquidity taken. Now comes confirmation, the structure shift. For example, price sweeps highs breaks previous low MSS confirmed. Retail still thinks the trend is intact. You know better, the structure has shifted. Pullback entry. Patience pays. Chasing kills. This is where discipline makes you rich. For example, wait for pullback to key H1 level after Mrs. stop loss placed just beyond liquidity pool. Most traders jump early or late. RT is about perfect timing, the pullback after the trap. Targeting liquidity. The market doesn't move randomly, it moves from one liquidity pool to the next. This is only thing you need to be profitable, that's what I use every day, it's repeatable every single day, that's how multi-millionaires move market. For example, price takes liquidity at first pool, next target is next cluster of retail stops. Forget Fibonacci, forget wishful thinking. Forget candlestick and everything you heard. All is lie. Test it. Backtest it. Cause of movement is liquidity. Think like the market. That's where your reward. Flow is clear, liquidity RT MSS pullback target. Target is liquidity pools. If you don't know where is liquidity or what is liquidity, check the link at description. This is the retail trap system. Final words. Think back. How many accounts have you blown? How many nights staring at the screen, heart racing, chasing losses? You thought ICT would save you. Order blocks, fair value gaps, equal highs, but they were chains around your neck. You weren't trading. You were gambling. The house always wins. The owner of ICT lose at championships. You can research about it. 97% of traders never withdraw profit twice. They pass challenges, then lose it all. Cycle of false hope, broken dreams, constant pain. They bleed until they realize the market punishes followers, not rewards them. But you're here now. RT is not just another strategy. Not another indicator. Not another recycled ICT concept. RT is your weapon, trend recognition, multi-timeframe clarity, retail trap entry, MSS, precision pullback, liquidity targeting. This is not theory. This is the battlefield. And RT is the only weapon sharp enough to survive it. Every loss brought you here. Every failure, a lesson carved into your soul. Now, you have a choice, remain in the 97%, or rise into the 3%. The pain, the frustration, the anger, it ends here, if you step forward. This channel is not for gamblers. Not for dreamers. It's for killers. Those who refuse to drown in retail lies. Those who want to trade with clarity, precision, domination. Subscribe, lock in, the next lesson could free you from retail slavery. The market is a battlefield. ICT is the graveyard of retail traders. RT is the weapon of professionals. Choose your side. Stay retail, and keep dying. Or join me, and learn to kill. This is your last chance. The choice is yours.